Your agency has clients. Payments are coming in. Projects are moving. From the outside, everything looks successful. But at the end of the month, there is almost nothing left. You check the bank account and ask the question most agency owners are afraid to ask. If the business is making money, why am I not keeping any of it? The problem is usually not a lack of clients. The problem is that revenue is entering through the front door while profit is quietly escaping through 10 different exits. Today, we are going to find those exits. The first mistake is confusing revenue with profit. Suppose a client pays your agency £2,000. That does not mean you earn £2,000. From that payment, you may need to pay a specialist, software subscriptions, payment processing fees, sales costs, revisions, taxes, and project management expenses. What remains after every real cost is your profit. Many beginner agency owners celebrate the full payment and mentally spend it before calculating what belongs to the business. Revenue makes the agency look busy. Profit keeps the agency alive. The next leak begins before the project even starts. You price too low because you are afraid the client will say no. You believe a cheaper offer will be easier to sell. But low pricing gives you almost no room for mistakes. One unexpected revision, one delayed specialist, or one extra meeting can remove the entire profit from the project. Underpricing also attracts clients who often expect more while respecting the process less. A price should not only cover perfect delivery. It must also protect the agency when delivery becomes imperfect. Most owners calculate delivery cost like this. The freelancer charges £700, so anything above £700 is profit. That is incomplete. The freelancer may charge extra for revisions. You may pay for storage, communication tools, automation software, stock assets, or project platforms. You also spend time onboarding the client, writing briefs, checking work, handling messages, and solving mistakes. Your time has a cost, even when no invoice is sent for it. If you do not calculate the full cost of delivery, you are not pricing a business. You are guessing. One of the fastest ways to destroy profit is offering unlimited revisions. The phrase sounds client-friendly, but it can turn one project into permanent work. The client changes the direction, then changes it back, then asks another person for an opinion. Now a project that should have taken 1 week continues for a month. Your specialist may charge more, your team becomes frustrated, and your next projects are delayed. Good service does not mean endless changes. A professional agreement includes a specific number of revision rounds and a clear process for additional work. Scope creep is different from normal revisions. It happens when a small project quietly becomes a much larger project without a matching increase in price. A client buys a 5-page website. Later, he asks for additional pages, new forms, written content, booking features, and ongoing support. Each request sounds small when considered alone. Together, they can double the workload. The problem is not that the client asked. The problem is that the agency never clearly explained what was included, what was excluded, and what would require a new fee. A cheap freelancer can look like a great profit opportunity, but cheap delivery can become extremely expensive. Poor work creates more revisions. Missed deadlines damage client trust. Weak communication forces you to chase updates. Inconsistent quality may require hiring another specialist to redo the project. Now you have paid twice and delivered late. The cheapest provider is only cheaper when the work is correct, reliable, and usable. A dependable specialist with a higher rate can often produce more profit because the project requires less management and fewer corrections. Here is a hidden expense many agencies never track. The first specialist delivers poor work. You spend hours explaining corrections. The second version is still not usable. You hire another person to rescue the project. The client only sees one final delivery, but your agency has paid for the work 2 or 3 times. This is why testing specialists before giving them client projects matters. A small paid test may feel like an extra expense. In reality, it can protect you from a much larger loss. Another profit leak comes from software. One tool for project management, another for communication, another for proposals, another for invoicing, another for automation, another for reporting. Each subscription appears affordable. Together, they can quietly become a major monthly expense. Many agencies pay for features they rarely use because the owner keeps adding tools instead of improving the process. Before paying for new software, ask one question. Will this tool save enough time or create enough revenue to justify its cost? If not, it is probably not a business investment. It is digital clutter. Meetings can also consume profit. A client requests a call for every minor decision. Your specialist needs another meeting to understand the feedback. Your team holds internal meetings to discuss the first two meetings. Soon, several hours have disappeared without any project work being completed. Meetings are not free simply because no money changes hands during the call. Every hour spent in an unnecessary meeting is an hour that cannot be used for sales, delivery, or growth. Use written updates for simple issues. Use meetings only when a real discussion or decision is needed. Small transaction fees can become large when ignored. Payment processors take a percentage. Currency conversion may reduce the amount received. International transfers may include additional charges. Some clients pay late, forcing you to cover the specialist's fee from your own money. Other clients request payment terms that delay cash for weeks. Your agency can appear profitable on paper while struggling to pay expenses in reality. The process, the deliverables, the communication, and the quality standard do not guarantee outcomes that depend on factors outside your agency. Not every client is profitable. Some clients ignore the process. They send incomplete information. They delay approvals. They change their mind repeatedly. They contact the team at all hours. Then they blame the agency when the deadline moves. A high-paying client with constant chaos can be less profitable than a smaller client who communicates clearly and respects the agreement. Bad clients create hidden costs at every stage. Customization can increase value, but complete customization on every project destroys efficiency. When every client receives a different service, different process, different pricing, different tools, and different delivery system, your team must rebuild the business for every sale. This increases mistakes and management time. Profitable agencies standardize what can be standardized. They use clear packages, repeatable onboarding, reusable checklists, consistent quality standards, and predictable delivery steps. The client can still receive a personalized result. Many agencies accept projects without deciding how much profit the project must produce. They only ask, "Can we deliver this?" A better question is, "Can we deliver this profitably?" Before accepting a project, estimate the full delivery cost, management time, risk, and expected profit. Set a minimum profit target. If the numbers do not work, you have three choices: increase the price, reduce the scope, or reject the project. It is expensive activity. Sometimes the agency loses money because the owner becomes the entire company. He finds leads, runs sales calls, writes proposals, onboards clients, manages specialists, checks every file, handles every revision, sends every invoice. At first, this may save money, but eventually, the owner becomes the bottleneck. Projects slow down because every decision waits for one person. The solution is not immediately hiring a large team. The solution is documenting repeatable tasks and gradually delegating the work that does not require the owner's direct attention. A profitable project can still damage the agency if one unexpected event creates a crisis. A specialist disappears. A client delays payment. A project needs urgent corrections. A subscription renews earlier than expected. Without a reserve, the owner uses personal money, delays another payment, or accepts a bad project just to create cash. Build an emergency buffer inside the business. A portion of profit should remain available for problems, refunds, delays, and replacement specialists. Money inside the bank account is not automatically available to spend. Some of it must protect the system. How much did the client pay? How much did delivery cost? How many hours did management require? How many revisions occurred? Were there extra tools, refunds, or payment fees? Which client produced strong profit with a smooth process? Which client looked valuable but consumed most of the team's time? This analysis helps you improve pricing, remove weak services, and identify the type of client your agency should pursue. To stop losing money, begin with 5 changes. First, calculate the real cost of every service. Second, Define the scope and revision limits before work begins. Third, test specialists before trusting them with client projects. Fourth, track profit by client, not only total revenue. Fifth, build a financial buffer and protect cash flow. You do not always need more clients. Sometimes you need better pricing, better boundaries, better delivery, and better information. A business can grow faster by stopping waste than by adding more sales. Revenue is not proof that an agency is profitable, and a busy calendar is not proof that the business is growing. A strong agency knows exactly where the money comes from, where it goes, and why enough of it remains. Before searching for your next client, examine the clients you already have. Check the pricing. Check the scope. Check the delivery cost. Check the revisions. Check the time. Your agency may not need another sale. It may need fewer leaks. Subscribe to Middleman Money for practical lessons on agency pricing, outsourcing, client management, sales, and building a remote business that actually keeps its profit. Because making money is only the first step. Keeping it is what creates the business.